All right. Let me know when you're ready, Dave.
All right, we ready.
All right. Happy Monday, everybody. In today's lesson, we have lesson number 2. We're gonna go over our daily trading plan. Our overview today is a fundamental catalyst. What are we looking for pre-market? Our technical catalyst. What am I looking for on the chart? We're gonna talk about building a watch list, determining entry and exit points, setting your alerts, and the most important step is executing and sticking to your trading plan. Okay, so first we have a pre-market strategy. Am I going too fast? Can y'all hear me?
I had
You good? You good? You good?
You straight.
Okay, cool. So as everybody knows, whenever you get on the website, Yahoo Finance, Market Watch, etc., you always see your futures, which are the Dow, the S&P 500, the NASDAQ, etc. Those are our core indicators of what kind of day the market is having. As we know, if they're green, market is going up. If they're red, market is going down, bullish and bearish. Every trader has a successful strategy. Every successful trader has a successful strategy. Everybody has a different trading style. Everybody likes to trade different stocks. Do you like tech stocks? Do you like banks? Do you like real estate? Do you like bonds, et cetera, et cetera? From research and reading, we found that a lot of traders like to pick 3 to 5 stocks that they like to trade over and over, or some traders like to trade whatever is popping. When I'm looking in the morning, I like to use a website called Market Chameleon. I like to go to the tab that has the volume. So I go to the link real quick while I'm showing my screen. So when I get on here, I can go to stocks and I go to unusual stock volume. And here we see some stocks that usually never have this many people trading them. So we can see 322, we see some big numbers, 129, another big number, another big number. And then you can see the price change on this side as well. And we've seen how Colin, he likes to trade a lot of small stocks like these, and he buys them in quantity. And you see it went up $1.59, 116% increase. So I like to use this. And from here, you would use this, and you would use the 2 strategies we're gonna talk about to indicate if you're gonna make this move or not. You can do the same with the unusual option volume. You can see you got 82% of calls, 83% of calls, 91% of calls. You can see the increase. You can see when their earnings are, implied volatility, their average volume versus what the volume is today, and the market cap. Was I? No. Okay. So now that we had a watch list, whether you you trade the same stocks over and over. I know Dez like to trade the FANG stocks. Or you just got you a watch list. It's early in the morning. Okay, now it's time to find some catalysts. So we need to know the difference between what's strong and what's weak and what we're not going to pay attention to. So we like to see positive earnings. We like to see deals and agreements. It's a lot of people who buy companies just because they have great dividends. If you don't know what dividends are, that's the payout for being a shareholder. That comes out every quarter. And some people even have a dividend portfolio destined for that. And they automatically set it up where every time they get their dividends, they reinvest it in the stock. So like AT&T is one of the highest paying dividend companies. We got price target upgrades. Des always send this in the chat. Every time he finds a price target update for one of the stocks he likes, he always send it in the chat. Cash on hand and profits. We like to see that. We like to see breaking news. And we always love to see a high volume. Des always stresses on that. We really don't care about management upgrades and downgrades, lawsuits. I know Apple had a lawsuit today. Des was telling me about.
Hey, let me say something as well.
Yes, sir.
So, with these catalyst examples, as much as you could say, look at a strong catalyst as positive this, positive that. A strong catalyst can also be the inverse of that. A strong catalyst can be if a company failed to, Tesla last week, it failed to meet the market's expectations, and that's a strong catalyst to play Tesla on the downside. And so all these examples that you can use for a catalyst on the upside, it can also be applied to the inverse to the downside as well. That's all.
Okay. Everybody keeping up, taking notes. We good?
Yep.
All right.
I'm straight.
So a technical catalyst. What are we looking for on the chart? Mike and Des, y'all feel free to hop in during this.
I got you.
Yep. So now basically we got the info we need to decide, okay, this stock may go up today. We got our watch list. We ready. Now we need to know when to get in on the trade and when we want to get out. So this is the third and final step of building our trading plan. So I'm gonna read the slide. Now we will use information that we gathered from our fundamental catalysts and check our charts to see if they support the expected movement. On the Thinkorswim trading platform, we use indicators that use statistical and historical evidence to determine market movement. As Prodigy Traders, we report basic indicators and strategy for every single one of our trades. There's no EMA.
Gunning here twice. That's why it's making that noise.
Doing what?
That was me. I should be good again.
Okay. So the EMA, the volume weighted average price is the VWAP, and the relative strength index, the RSI. So we went over this last week. We're gonna go over it again because we want to drill this into everybody's trading plan, everybody's head. Everybody needs to know this.
Also, I want to add in there. Go ahead, go back, Chris.
Yep.
That these are basically like the 4 basic indicators that we use in our trading plan. It is hundreds of different indicators that a lot of traders use. You know, as you go on as a trader, you'll find out which strategy works best for you. So, but for today, we're going to talk about these 4 indicators because we use them and they work. They're proven to work. And I actually showed Mitty that today a little bit. So go ahead, Chris.
And so, and with the
I got the notes.
go back.
Yeah, I'm trying to see what notes we had. I know we had some speaker notes. Okay, go. You want me to go back?
No,
I got you. Right here? Oh,
Yeah.
next one.
Right here. So with this, this is something that's pretty complicated to grasp, especially as a beginner. And so this is a general breakdown of what I do in the trade ideas. So I combine everything, and then when I send like the screenshots of the charts I'm looking at, this is what I'm doing, and I'm kind of setting up the technical. When I say technical catalyst, is the technical analysis aspect. So the chart patterns, candlestick patterns that are forming, and in relationship to the indicators and volume that we're using. So just to kind of give some clarity on what the trade ideas is, this is what the trade ideas is.
Yeah, the trade idea tab. Yep. You ready? So volume. Does anybody know what volume is? Des and Mike don't answer.
Volume basically
No.
like what can I say? The peak of the well, it basically show you the peak of the market, like basically when everybody's buying in it.
Okay.
That's close. That's a good answer.
Yeah.
All right.
So volume is basically the number of shares being traded during market hours. It helps identify which stock investors and day traders like ourselves show the most interest in. We care about what the rest of the world cares about. Low volume is lack of trader interest. Small price movement equal minimum gains. Yeah. The market can also measure and weigh volumes of a specific stock over periods of time. This tool gives traders an advantage and is often used by many well-known profitable traders. So right here on this chart, you can see this is the volume levels on the bottom where the arrows are pointing. Everybody see that?
Yeah.
Any questions? Anything?
Hold
Biz,
on.
might got anything?
Yeah. So if y'all look at,
Your mic breaking up.
can you hear me now?
Yeah.
Okay. So if you look at this chart, you see that we have a big red candle that comes down. Go ahead and put the cursor on the red candle, Chris. That one right there. And if you look down at the volume, you see that if you go straight down, it's not that much there. But to the right, now we have 3 big red candles that, you know what I'm saying, they're a lot bigger than the first 3 that you see when the market is consolidating right before them. And as you see those bigger 3 red candles come up, you see the stock price starts to come down a little bit. And over the time, you'll see like the red candles are beating out the green candles. So the sellers are in control of the market. So that kind of lets you know that the market is on a downward trend. Y'all see how that happened? All those big red volume bars causing the stock price to shoot down.
So if I can add one more thing. So this goes to kind of when we talk about understanding the candlesticks, right? So if you see, Chris, can you put the cursor on the third red candle with the high volume? No, to the right.
Right here?
Yeah. So if you see in this candle, it's not what we call a bearish engulfing candle, which means the body of the candle isn't long, right? And so this shows you, considering the high volume with this candlestick, that it shows that a lot of buyers are interested, but there's more sellers, and that really validates their red candle even more. That makes sense. And so it really solidifies that price action movement. And even with the 2 candles to the left, right? Now, if these candles had low volume on them, I'll be like, I don't really respect them in a sense because they're not validated and supported by a lot of other investors. But when you see a candle um, like it's almost in a sense a doji candle because it doesn't really show a clear direction, but at the same time it shows you that a lot of people are trying to buy it, but there's even more sellers. And so there was a little 2 cents I wanted to add in there.
Okay. So go over say the name of this, what type of candle this is, so everybody can hear again. This red one, this third one.
It's a bearish candle, but it's almost a doji.
Okay.
So like go to the right where it's the candle
Yeah.
with the put sign.
Or here.
All the way to, you gotta go over some more. Some more. Right there.
This one.
No, to the left. To the left, 2 more. It look like a plus sign. That's what we call a doji candle. And a
Okay.
doji candle, it shows indecision in that time frame. So it basically shows that it's basically like an even battle between buyers and sellers.
Okay.
And so, although the candle we were talking about is a bearish candle, still, it almost reflects a doji candle because the length of the body in the center.
Okay.
So,
Yeah, I just wanted to reiterate that so everybody can understand.
so yeah.
So when you're looking for a doji candle, you want to be looking for like a smaller body with longer wicks. So you also see a lot of dojis and consolidation. You can actually see it there. And before the stock actually trends down, you'll see the consolidation, a little doji candle, smaller bodies, longer wicks. So yeah, it's something to look out for when you're looking for your breakthrough.
Any questions? Everybody understand that?
What's Doji, y'all? Y'all talking about Doji going?
Nah. So doji is it's a type of candlestick. So
We can put the link to the it's like an app on in the app store that teach you all the candlesticks.
Okay.
oh yeah, we also have a MIDI. We have an app that actually shows you how to like play candlesticks and everything.
Yeah, and then it got like a little quiz on there letting you know right or wrong. It's like a little quick quiz you can take during the day, like kind of guessing what's about to happen or which kind of candlestick it is.
Hey, Mitty, can you put that in the stocks tab for me, bro?
I got you. I'm about to
Yeah, put
copy
that.
Cool.
I forgot to bring that up too.
Which one y'all want me to use? Is this a good one? Right here?
Why didn't you just type in doji?
Oh, hold on. How do you spell Doji?
DOJI.
Des, I'm about to text it to you. It ain't letting me copy and paste it.
That's the.
It's-
Is that the? What,
The
that,
first,
that's the,
Chris.
This one?
Yep.
Yeah. So
So that's gonna be your doji, Marco. Your candlesticks with smaller bodies and longer wicks. So these dojis actually have no bodies at all. So these are some perfect dojis, but you'll see some that have smaller bodies, but overall they're going to look similar to this right here.
yeah. So to make it more simple, like if you see in this picture right here that Chris got pulled up,
This one right here, right?
yeah,
All right.
the doji, it doesn't have a body. Like you see, like all the other candles, it has like a green body, a red body. A doji candle doesn't have a body, and that's because during that time frame for the candlestick, it hasn't shown a clear direction. Like the buyers didn't win that time frame, neither did the sellers, and so it'll show like that. And when we see candles like that, we just see indecision.
Mhm.
Like the price action didn't confirm this stuff. And so
A lot of consolidation, one of the key terms from last week.
yeah,
So if you see a lot of dojis, you'll probably see a lot of consolidation.
So y'all said basically nobody means
it's a doji.
indecisiveness.
Yeah,
Indecisive.
yeah.
Okay.
Yep.
Bit.
All right.
what was
Well, and we'll definitely get to talk more about candlesticks and we'll probably have a whole lesson on candlesticks.
Yeah,
Just so
and
everybody can get more comfortable.
me get us that app. It'd be good.
Nico, you had a question? Is he muted?
Yeah, he's muted.
Who had a question?
My boy Nico. I thought he had a question.
We good?
Yeah, we good. Go ahead, go back to the.
what was the name of the app?
I'm gonna put it in the chat.
Okay, bet.
You can send it to me now. I'm gonna put it in there. I didn't even know it was an app, honestly.
Yeah, something I picked up with the Forex gang, man.
All right, so now we got the EMA. The EMA is the second most technical indicator when it comes to moving averages and stock charts. The EMA tracks the price movement of the stocks. It is designed so that we can see price trends over specific time periods. In our strategy, we use the 9-day EMA because it helps us track average price movement over shorter periods of time. So traders who hold their stocks medium lengths of time most commonly use the 20-day or the 50-day EMA. And traders who expect to hold and invest over longer periods use EMAs up to 100 days or longer. So if y'all have watched trading videos before, all traders use the EMA. They all use different time periods. Some of them use all four on the chart at the same time. It's just up to you. I know me, Des, and Mike use the 9-minute, and that's pretty much it. If we are going for a swing or trying to find something else, we'll pull up a different one. But for daily use, we're using the 9.
So for most of our swing trades, I'm a big swing trader. It's part of my little expertise. We use the 20-day and the 50-day. Those are good EMA lines for our swing traders. Trades that we're going to hold for longer than a day, maybe a week or two at a time. You want to definitely check those 50-day, 20-day, 100-day moving averages. And also another thing that we don't talk about with swing trading, I also use a simple moving average, which is your SMA. So simple moving average is basically going to track the overall movement of the stock, and your exponential moving average is really going to check that recent price change, because we want to know what the price action is like.
Diz got anything?
I mean, pretty much covered it. I think one EMA to really foot stump is the like, and I'll be incorporating this more in like the trade details when I talk about like swing potential. Is the 200 EMA. So the 200 EMA is it serves as the strongest support for a stock. So like when you're swinging, you want to get in at the lowest price possible. So you don't want to get into a swing when it just reached a new high or whatever. So we're going to be using the 200 EMA along with the SMA. Like Gunn said, it's really good for swing trading as well to maximize our profit margins for each swing trade that we get. But I mean, EMA.
Okay, great.
You said what was you gonna say again?
Oh no, go ahead. I was just about to talk to him about the crossing method.
Oh yeah. That is good to talk about. But EMA is an indicator that a lot of top investors use because it shows you the moving average. It shows you on average where this price should be. So if a stock, like you look at this Apple chart, is this the EMA on here, Chris?
Yep, that's the EMA.
Yeah.
All the examples are real life.
So for example, if you see this EMA, if say for example, I like to play what's called the break of the EMA. So as soon as a candlestick breaks this EMA, that's when I like to enter the trade because I know that it's trading above the average price, right? And so, like they say, you want to hold your winners as long as you can, cut your losses as fast as you can. So my trading plan coming in here, I see that it's trading above the EMA. I would say I'm not getting out of this trade until it breaks it, right? To maximize the length and the profitability of this trade. So you see, it wasn't until this red candle probably, if I can't even see the left side of this chart. Oh yeah, I can. So it was probably at like 111.60. That's when we probably got out of the trade as soon as we broke the EMA. And so not only can the EMA show you your entries, but it can show you your extras as well, and help you stay in the run in the good trades and get out of the bad trades as fast as you can. But yeah, that's all I got.
Everybody understand that? Any questions? Anybody want to tell me where they think they would get in based off this chart?
You got the
Is it?
right.
Is it
That's
when,
a good question. Who can tell us where to get in at using this chart?
Would have got
Is it-
in like at 109 back. I can't tell you the date, but you can see the
Where
price. 109.51.
right here?
I would have got in like
Support?
yeah, I probably would have did it with hit the support line again. Not the first time, you know how it was going rising up. I wouldn't have got on the uptrend.
You come out right here.
Yeah.
Because
some below that?
like well, okay. So you got the support right here, and then you got the support right here. Now you
For me, that would have kind of almost been like a guarantee going up. I would have just let it go up a little bit, then I would have got in.
I get what you're saying there, but if you take everything from that support forward, let's say we're currently in the market right now, you can't see what's going forward. So you get in when it's at the support, but when you're using EMA, you want to look for confirmation.
Yeah, so the confirmation would be all right. So you see, you got this green candle and the EMA strike the wick, right? But like you got the second confirmation candle that stayed above the EMA. So this would be a confirmation. I know Mike like to use 3. So Mike, what you would have waited to right here?
It all just depends on how the volume was, the RSI, putting it all together, the whole thing, But for the most part, you can see that we can use our EMA line as a support. you see how our stock kind of stays above the EMA line. It touches it and then it goes back up. It touches it and then it kind of went under a little bit, but then overall it went back over. It shot up with a large candlestick. So now we have our confirmation with those two candles that this stock is probably on the uptrend. But we had confirmation even before that. You know what I'm saying? We already saw it going up. But those two candlesticks that broke above the EMA line, that's confirmation that that's probably a good point to get in.
So with this, right? For me, right, you see, you have the resistance right here at 109.51. So I'm playing a break of the resistance and I'm playing a break of the EMA. So even when it first broke, right? You could have potentially played that. I mean, because like Gunn said, you can't see what's coming to the right? You see the break and you see the clear break above the EMA and the support followed by two other candles, right? So you could get in right there and then either take your profit at the top or, at the start selling a little bit, take your profit there. But if we're talking about the second break of this support, this resistance in EMA, if you see right here is the space between this green candle with the resistance and the red candle, you have what's called a gap, right? And so typically when a gap is when you have a space in between two candles and it's not a candle in there. And so typically what happens with gaps is they do what's called a gap fill, right? So if you see this space right here, this green candle right beside the red candle came back down to do what's called a gap fill and fill this gap. And so then I would have got back on the retouch of the EMA because it with this gap fill and it's shooting back up with this nice pin bar right here, it validates that uptrend movement. Because you can look at it as, oh, this is a red candle right here, but then you see a nice pin bar green candle that fills that gap. And so therefore that movement is validated and respected by the investors and price is gonna go up. But what I like to do is I don't like to chase a stock, right? So say if I say we're looking for a break of 109,
and you saying we missed this entry point right here?
Yeah, and say we missed, these first 1, 2, 3, 4. Say we missed these first 4 candles right here, and you're like, dang, I think I missed
right here, right?
Yeah. No. As soon as it breaks, right?
Oh, right here. Okay.
If you miss these first 3, you're like, dang, I missed out. But what you don't want to do is chase it, right? So when I know this stock can run, I'm gonna wait for a retouch of the EMA, right? And so if you see on this next candle, well, it's like 1, 2, 3, 4, 5. On the 6th candle, right beside you see it retouches this EMA.
Are we talking about this one right here? Or
No,
this one?
That one right there.
Yep, retouched it right there. Okay.
No. You're too far. Go back to the left. Can y'all see my cursor or no?
No, we can't.
No, we only get my cursor.
Okay, go down, Chris. So the initial break, right? Right there.
Oh, this one.
Yeah. I would get in right there at the EMA, and then it's a nice little scalping opportunity to stop, and we'll play it to.
Yeah.
And so that's the rule number 1 is don't chase the stock.
Yeah. So basically, Mini and Marco was right on the entry right here, and then if you missed this one, you could have got this one right here.
Yeah. And so
everybody cool on that?
Yeah, I'm learning a little something, man. Yeah.
Don't worry. Don't even trip, because at the end it's gonna all make sense, man. It's gonna all make sense when we put it in the real life trading market.
Yeah, and so like Chris put in the chat today, it's better for you to miss an opportunity than to force an opportunity and lose money. So the key to being successful in the market is being patient and being disciplined and sticking to your trading plan. I'll say I've been a victim. I maneuvered away from my trading plan last week. Cost me some money, but trust me, lesson learned. Stay patient and understand the ultimate goal when trading is to eliminate risk, right? You stick to your trading plan and you be good from there. And if you don't have a trading plan at the moment, that's what we're here for. We all in this together. All right, you can go, Chris.
Right.
So next we got the VWAP, the volume weighted average price. This is a trading formula that measures the price movement of a stock based on price and volume. As we just went over volume. In a sense, it's kind of the volume and EMA combined is another tool to give traders confirmation on when to buy and sell stocks. There are different ways to trade the VWAP, but our strategy in the most simplest form of explanation is to buy/call when stocks are trading above the VWAP line and to sell put when they are trading below the VWAP line. Okay.
Hey, you want to talk about what the VWAP actually is? So some people gonna be like VWAP, you know. What do
Can you
you?
go back to that slide? That
Yeah.
definition? Real quick. I'm gonna screenshot it.
Yep.
All right, got it.
Make sure
Who
y'all
you said this?
yeah.
I was asking Chris if he wanted to talk about.
I'll let you go with the VWAP. I just got on the
Yeah,
VWAP.
you know the VWAP your thing. Go ahead and talk
Yeah, I
about
just
the
got on the
VWAP.
VWAP. You put me on the VWAP.
Okay, so the V, like we talked about, the EMA was the exponential moving average, right? That calculates the price action movement in the average of the moving price action. The VWAP incorporates volume into that calculation, and so one thing that I like about the VWAP is that not only are we getting the moving average price, but we getting a factor with volume in it. Because if you remember earlier, and in the lesson, we talked about the importance of value, how, in a sense, volume can tell you the true strength of a price action movement in the stock market, and it also can tell you, they can tell you how strong a move is, and if that price action movement is actually respected by other investors. So I like to combine the VWAP and the EMA because I'm getting two in one, and so the VWAP is important because it shows you the movement price for with the volume calculated in.
And as you see on the chart, the VWAP is going to be just like the EMA. Most of the lines are going to work the same. So we see that break above that first candlestick is going to break above the VWAP, and then we get two confirmation candles to let us know that it's on the uptrend. Little consolidation, a little pullback there, and then boom, we have a break of another resistance, and that definitely tells us that this stock is moving strongly on the uptrend. And as you look further to the right, it tells us that it is true. So it's going to be used just like the EMA. Your VWAP is going to be moved further away than your EMA because your EMA is going to give you recent price action. So every minute that EMA is going to be moving with the stock price. So when you add your non-EMA indicator and your VWAP indicator, you'll see that the EMA is lined up right with the stock price, almost damn near the same. And then your VWAP is going to be a little bit off. And as the volume goes down or up or however, sometimes they cross and they can go exactly opposite. So the VWAP could be on top, and as your stock is going down, mismatch. Everybody good?
Yeah.
Yeah.
Remember we trading buy and call when the stock is above the VWAP, sell and put when the stock is below. We see it's above, so we call it.
The RSI. This is Diaz put me on the RSI too. I didn't know about the RSI. All right. So the RSI relates a lot to the volume. As you can see, we got 3 indicators that relate to volume. So volume is important.
Always track the volume. Volume is heavily important.
So this basically measures the momentum of a stock's movement. While the volume tracks the momentum of the amount of shares traded by investors per day, the RSI tracks the momentum of the price movement. It tells us whether a stock is overbought, overvalued, or oversold and undervalued. It is measured on a scale from 0 to 100, with anything trading over 70 to be considered overbought, and anything trading below 30 to be considered oversold. I'll give y'all a minute or two if y'all need to write that down or screenshot.
This is gonna be one of my favorite indicators. Also, one of the easiest ones to understand. So once we get into the example, you'll definitely get it real quick. Just add that to your charts, and you should be good to go. Everybody good on this screen on this slide?
I got it.
All right, cool. Go ahead.
So on this chart, we got the RSI right here. As you can see, it's going up and going down. As you see, if it goes above, it's oversold, and if it goes below, it's underbought.
So, if I may intervene,
Yeah.
so the RSI is an indicator to help anticipate potential reversals in the stock market. So, for example, and oftentimes the RSI will kind of reflect the price action movement of the stock, but not always, right? So, for example, if you see when it hit this low point at $11, the RSI was below 30, which is the oversold, and so
Des, what's the word you call? What's the definition? What you call it?
this is divergence, right? So
Yeah, right there.
the divergence, you see the price in the market falling, but you see the RSI rising. So that would show you, okay, now we're looking for a reversal to the upside, and vice versa. So if this stock was trading above 70, in 80s, 90s, or whatever, and the price is starting to move, you say, okay, now we're looking for a potential reversal to the downside. So I really like this because it's like giving you one step ahead on the market. And so, but like sometimes, I mean, you got to be careful. That's why we got our other
Indicators to confirm.
indicators if you use, including volume. But because sometimes, for example, like GameStop last week, GameStop was trading in the RSI 99.98, and it still kept pushing. So like I said, indicators are simply for an indicator. It doesn't nothing is guaranteed in the market. Like the market does what it wants, but it's just an indicator to kind of help you better anticipate future price action moves. And so this is our final one that we use that's really helpful to us. And, I know Gunn got some sauce he want to add, so I'll let Gunn add his sauce.
Okay, so go ahead, change the slide.
Next one.
Yeah, go to the next one. So now the fun part, we get to piece it all together. We got the volume, the EMA, the VWAP, and the RSI. I'm gonna go ahead and take over the screen real fast, Chris.
Okay.
All right. Can y'all see me?
Hold on.
Chris got his share now.
How do I?
Is it up now?
No, I gotta pause my share. Okay, now you good. Do it.
Right.
Click again.
There we go. Everybody see my screen?
Yup.
Okay. All right. So on this screen, this is trading view. We have everything in here. We have our volume at the bottom.
Hey, Gunn.
Here. We have our VWAP. It's going to be the red. I use red for VWAP. And we have our non-EMA right here going along the line. So this is real life. This actually happened today.
Gunn,
I
can't see it on the screen that's recorded. I can't see it.
You can't see it?
You see the face.
Chris, take yours down.
Hold on. Okay.
Yours completely down.
All right. Now I see. Oh, we good now. This mic.
You can see it now?
Yeah, I can see it now.
Okay. So this is going to be our volume down here. We talked about that. This is going to be our VWAP. This is going to be our non-EMA. I thought I had the RSI on here, but I guess I don't. They only allow me to have 3 on this one. But RSI is simple. It's just going to be 100 to 0. I mean, 0 to 100, 70, 30, 70 being overbought, 30 being undersold. We just went over that. But here's going to be our VWAP line. Here's going to be our non-EMA. So as the day went on, we were actually supposed to get into this. So I had a meeting at 10 o'clock today, and as you can see, around 10 o'clock is when the big uptrend started to happen. Right in this area, we have that our stock broke above the 9 EMA and the VWAP. This is very good. We have our confirmation candles, everything. This would have been a perfect point to get into the trade. And the reason why I show y'all this because we talked about 4 indicators today, but we're not just basing our trades solely on just one indicator. We're going to use all our indicators together along with the fundamental analysis that we talked about earlier with the cash on profits, the dividends, and everything that could potentially move a stock up. And we're going to use it all to get into a trade. So if we would have got into a trade right here, I had an alert set at 236, I believe. So once it broke above 236, it came back down. This would have been a perfect opportunity to go from 236 to 242. That could easily be $1,000 day in the trading market, easily. So that's a great example. Anybody have any questions about that? Let me see.
Hey, talk about the.
I'm gonna show y'all Facebook. I actually got into Facebook today. I had Midi trade today. He actually won him $130. So I had a support line, a resistance line, as you can see right here around 260, and it broke above my resistance line. Confirmation candle. So we were able to ride this. And as you can see, I was telling Midi because Midi was telling me because we went up about $150, $130, and Midi was like, man, we should have just got out because it dropped back down to 30. But I stuck with the trading plan. As you can see, it goes up and it tests that 9 EMA. It continuously just bounces off that 9 EMA. So we rode that all the way up to about 263. And once it broke down, that's when I said, okay, call it cuts. That trade right there, just the uptrend of $2-3 brought in $130 profit in less than an hour. So I just wanted to show y'all some real life examples that this technical analysis stuff, it really works. If you stick to your trading plan, you shouldn't have a problem. You know, you use all the fundamentals, the analysis and everything, you should be a good trader. No problem. Just stay disciplined.
So, Gun, do you want to talk about the indicator, the golden crossover, or do you want me to talk about it?
Go ahead.
Okay, so like if you see on this one and even the Microsoft trade, right, you see where the VWAP and the EMA crossed over, right? When you have two moving average indicator crossovers, they call it a golden crossover. So, and then on top of that, when you have candlesticks that break that, you know you in for a good day. Simply because these strategies that we're talking about, almost every other investor uses the same or very similar indicators. And so when they see these common setups that we are using, it validates price action movements in a sense. And so when you see two indicators cross over, what investors call it a golden crossover. So it's another thing to look for if you trade. Yeah, that's all I gotta say about the golden crossovers. But I mean, Gun, he explained the real life how we look at price action movements, and so yeah, that's how.
And you can also tell that, like he said, other investors, like we talked about the EMAs, it's one of the most used indicators in the market, period. So when you see things like it bouncing off this 9 EMA, it's not totally a coincidence. You got to remember that there are millions of other traders around the world, and they have that same 9 EMA set up. And you know they're expecting the same thing you're expecting sometimes. You know, so when you see it bounce off these lines, it's not just a total coincidence. Sometimes it's actually the trend of the market because other traders are looking at it as if they're looking at it exactly the same way you're looking at it.
Yeah, because what we don't want to do is we don't want to fight the market. You want to, and what they say in multiple books that I've read, you want to be in harmony with the market. The market is going up, you want to be in the mindset of a bullish uptrend mentality. If it's going down, you want to do the same for the bearish market. But you don't, like with the market, you can't implement your will on the market, right? Because if you do and you're trying to force different things, you're gonna lose money. And so like that goes back to our number one goal is to eliminate risk. And so market is uptrending, you want to look and be in harmony with the market. You don't want to fight it. But yeah.
All right, I'm gonna go ahead and stop my screen share.
Cause you got some more slides?
Oh no,
we
that was last slide.
yeah, we also was gonna talk about just setting the alerts. That was it. So if you could
Yeah. When we went over there last slide, do y'all remember? So once you look at the chart and like how Mike said, I set my alert at 236 from Microsoft. You just need to you can get an app. You can use Thinkorswim, you can use Yahoo Finance, you can use TradingView. You hit the alert button and you want to set that price alert. So we all got jobs. So when your phone go off 236, okay, let me go look at the chart and confirm this price entry point and let me get in. So you don't have to you won't miss your entry points.
And then the trading ideas, if you go look,
This always has a price entry point.
Yeah, I provide the price entry points so that as soon as that stock hits that price and breaks that price, you can get in, and instead of having to wait for the for me to type it up, which I mean me to type, like typically I look at stocks and I'll see the stock approaching that mark, and so I'll kind of already have the trade typed up and just hit ready to hit send as soon as it breaks. But if you want to give yourself that step ahead, you can do that.
Everybody's in the Discord. So when the trade ideas drop, like he said, he always drops an entry point. Most of the time, he drops a price target too. So what you should be expecting that stock to be moving to a certain point. So when you see that in the Discord, if you're not doing anything, set an alert. That's the whole purpose of the trade ideas chat. So to let you know exactly what he's thinking, so you can kind of get on board and make your own analysis, because that's exactly what I do. I have my own set of trades that I'm working on for myself for the day. And when Dez drops in, I know he has good trades with he's like 15-2, 15-3 this year or something like that. So I just make my alerts, saying? When they go off, I do my analysis again. If I want to get in, I get in. If I don't, I chill.
And another thing that I put in there is I put our profit target. So our profit target is what we plan the stock to reach, right? So say, for example, if we get into a trade,
pull up your chart,
or pull up the Discord.
Yeah, I just pull up the Discord.
Yeah.
All right, I'm gonna have to. Let me see if I can share my screen while I'm recording. Cause I don't think it let me. Oh yeah, dude. Wait, is this Discord? No, that's the.
Boy.
No.
Play with Zoom like that.
All right, let me see. Let me close this out. Add it back. Zoom, share screen. All right. Here. Is it up? Can I see?
Yep, it's up.
Yeah.
So trade out there. That's where it's at. Right here. So let me see. So, for example, GameStop, right? GameStop, nice symmetrical triangle, could go either direction, which we saw today. It went down. I hate this stock. I'll never trade it again. But so I said we're looking for a break. We plan this to the upside, right? Because this could have went either way today. We were looking for a break at a $360 level with a price target of 430. So if you were like, okay, how do I set up alerts for this, right? You could put in an alert for the break. So at or above 360, and then you could do at or above 430. So if I know the whole purpose of this chat is for convenience, right? It's to not only educate you, but to help you profit in a convenient way. So if you got busy going on, you see this, you can put your price alerts at 360 and 430. So when it hit 360, let me enter my trade. It hit 430, I'm out. If I get out before the 430 level, I'll type in the trade signals and I'll say sold, which means that I sold my position. You should do the same. I mean, but it's up to you. That's at your own risk. Same for when I said to the downside, we're looking for a break below the 250 level with a price target level of 200. So you could put at or below 250, at or below 200. So you could have put up 4 alerts for this one stock right here.
So overall, the point is the alerts are going to do all the hard work for you. So you don't have to sit at your desk with 6 monitors up watching 100 different stocks, trying to figure out which one is moving in which direction. The alerts literally do all the work for you. So if you are a new trader and you don't trade 8 hours a day sitting at a desk just watching the trade and you don't use alerts, it's kind of going to be hard to be, a good day trader at least, without using these alerts, because you can't get in right when you need to. You kind of just checking the market at times and you be like, I missed it. But those alerts are life saving, and we use those alerts today to make profit.
Yeah. And just another heads up. So if you go to the general announcement tab, we got our YouTube channel with all of our recorded previous lessons that we had. And so if you ever want to go back, reflect, take some more notes, get a deeper intel of the content, you always can go and watch the YouTube videos, and which I advise everyone who's new to go there. If you still go through there and you have questions, you scroll down right here, we have a questions chat. Please do not hesitate to ask a question. There's no such thing as a dumb question. Myself, Chris, Mike, or anybody who got the answer to it, this is what we're here for, to help you out, to help you grow as a trader, help you profit.
Yeah, between all of us, we damn near up 24 hours a day, so you can't go that long without an answer. So, we're gonna get you an answer for sure.
Yeah.
Most definitely. But we want y'all to ask those questions though. We want to know what y'all don't know, to make it easier for you. The goal is so everybody in here can get money. Everybody want to get money. Everybody want to get paid. So if we can help y'all, let us know.
Yeah. And so that's all I have for the alerts section. I'm thinking, is there anything else? Anything else?
Y'all got anything? Anybody in the audience got any questions or anything like that? Anything. Doesn't even matter. Something
Y'all really accessible to me, so I ain't got no questions.
Okay.
Oh yeah. Last answer.
Not right now, but when I do have some, I'll for sure reach out.
Hell yeah. Hit that questions chat up.
Yeah. And last thing, make sure y'all turn y'all notifications on. So, for example, you don't miss a trade.
Yeah, you have to go to each tab and go to the settings on each tab to turn notifications on to all messages, so you won't miss it.
I know, for example, I've sent a couple signals and like I don't really see nobody get on, and I think that's because people don't have the notifications.
You got notifications tab on.
And so,
and then remember what you said earlier, Mike. Even if you ain't got the capital for it, still make them paper trades, kind of like get the education on it.
Yeah, we still pushing on paper trade. If you don't feel comfortable with starting with real money, you know what I'm saying? Just start out with the paper trade. They give you $200,000 to lose, to mess up, to learn, to make mistakes. So take advantage of it. We still dropping these trades, and paper trading is real market time. So it's not like you trading something fake, trading what you see. So take advantage of it. Another thing, Mitty, you mentioned it. You said you close to us. If you got any questions, you'll let us know. Also, for everybody that that's closer to us, to have us, personally, our numbers and everything, I ask y'all that y'all still hit the questions chat, because whatever question that you may have, another person in the group may have that same question as well. So even though y'all can hit us directly, try to hit up the questions chat so we can kind of help everybody out, instead of people individually.
Yeah. And so even if like, say for example, you don't really want to do the paper trade, it's still good for you. Like even if you're not doing the paper trade, to look at the trade. So like say for example, I send a call, you're like, okay, I'm not fully there comfortability with trading yet, or my money hasn't deposited in my trading account yet. But I still recommend that you follow the trades to kind of get an understanding of what we're doing and how we maneuver and things and stuff.
And definitely get comfortable with Thinkorswim, so we can
It's
post all the trades
too, because
what'd you say, Mitty?
I about to say it's good practice too, because today I was really like kind of practicing on pulling it out, and it like let you know how to like timely pull it out, because you can't lose money not knowing how to pull it out in time.
That's exactly what I was finna say. So we can put in all the trades we want to and everything, but until you actually get the reps in, the reputations of actually putting in a position and closing that position, getting in a trade, getting out of trade, until you actually get that repetition, you probably won't know how to do it. And when it's actually time to do it, you don't want to be stuck in a situation to where you can't get out of trade. That's the last place that you want to be.
Does the paper trade money reset at a certain time, or you got it? You have 200,000 the whole time.
I think I tried to reset it, but no. It gives you 200,000, and whatever you add on top of it, it'll put on top of it. Whatever you lose, it'll take from it. You get what I'm saying?
It's virtual money.
And it's kind of hard to, mess up $200,000. You know what I'm saying, Zach?
I know what to do with 200,000. Trust me.
Make sure you use the proper risk management. Treat the paper trade as if it's real, man. Because when it comes to real time market, we want to make money. We don't want to play around.
Yeah, it's all virtual money. So if you lose it all, you just get some more. It's not. But Chris, he did a good job last week in kind of showing how to get in and out of trades. So that video on YouTube as well. So
that's definitely in the YouTube chat. Make sure y'all hit that up, share it.
Yeah, so make sure y'all watch that as well. But if we ain't got no questions, any remarks, comments,
Questions, comments, concerns, anybody?
I respect people's time. So. And
all right. Yeah. We want to thank y'all for coming out. You know what I'm saying? We're going to be here probably same time next Monday. It's going to be every Monday type thing. So we appreciate y'all for coming out. You know what I'm saying? Keep coming, supporting. Let all y'all friends know we on the money. We on the paper chase. So.
We out.
Figure out how do I need to stop recording.